Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Zach Wasserman, Chief Financial Officer of Nasdaq-listed Huntington Bank. Zach, it's great to have you with us. Welcome to Trade Talks.
Thanks so much, Jill. It's great to be with you as well.
Huntington Bank recently reported strong Q2 earnings as the economy faces continued uncertainty. What are the major reasons behind Huntington's strong earnings results?
Yeah, we were very pleased with the way the business is performing in the second quarter, and it was really a continuation of the trends we've seen for the last several quarters, with almost every major business line delivering growth. One of the metrics that we saw happen in the second quarter that we were really pleased to see was a continuation and actually an acceleration of loan growth, which is a key driver for our business results, achieving 10% annualized growth in the second quarter. And we also saw what was great to see a number of our key business lines like payments and capital markets also really contributing. All the while, expenses were actually lower in the second quarter than they were in the first quarter. So we really drove quite a bit of margin expansion as well. And as well, lastly, I would say credit continues to perform exceptionally strongly. Record low net charge-offs in the quarter, just 3 basis points of net charge-offs in the second quarter. So overall, business performing quite well right now.
Huntington Bank is the 10th largest regional bank and 25th largest national bank. What is Huntington hearing from its customers about the economy?
You know, we're clearly watching the economy very carefully. The path of interest rates, the trajectory of inflation, and jobs and employment. We believe that we're very much in a labor-constrained environment right now. With all of that said, what we're hearing from clients is continued expansion and investment in their business, and just generally in what they're seeing in their own environments. On the consumer side, continued solid trends, and on the commercial side, investing in equipment and in processes to enable them to be more efficient and to drive automation over time, which for us as the 5th largest bank-owned equipment finance company, really we stand to benefit from that quite a bit. So notwithstanding the headlines and sort of some of the uncertainties on the horizon, what we're seeing right now on the ground is continued growth and expansion across almost every major client segment.
All eyes are on the Fed regarding interest rates and consumer and business spending as we battle inflation. How is Huntington managing through this environment?
Well, the higher interest rate environment that we're seeing right now, and if you look at the forecast for the interest rates over the next several quarters, you're seeing that continue to rise even in the future as well. All of that drives higher net interest margin for us. And so when you couple that expanding spread across every major loan category with growing loans, like I mentioned, we were doing very strongly in the second quarter, it's really driving quite strong overall net interest income revenues. And so that's we're poised to benefit from that quite a bit as interest rates here continue to stay higher and are tracking higher over the future as well.
Huntington is $179 billion in assets. The banking sector is going through a lot of transition, scrutiny, and consolidation. What's next for Huntington, Zach? Another merger? What's the longer-term vision for the bank?
Yeah, well, I appreciate you asking that, Jill. It's a great question. And overall, we feel great about the long-term outlook for the company. We're intently focused on our organic growth plan, staying focused on driving our long-term strategy and really executing. Last year, we acquired another bank, the TCF Bank, that was based in Michigan and Minneapolis. And that really offered a number of new growth opportunities for us as well, which are just beginning to really bear fruit and should provide the opportunity to accelerate and really sustain growth over the next several years, in addition to our pre-existing organic growth opportunities. So there's a lot of growth ahead. One of the things we've been doing for the last several years and is a key ingredient to that growth is investing in digital technology. As you know, technology is really a driver of growth and frankly, client expectation for services in the banking industry. Over the last 3 years, we've doubled technology development, and that's really standing to benefit a lot of our key businesses like payments, like our wealth management business and others. On M&A, really where we see the opportunity to leverage that strategy is with smaller bolt-on acquisitions. Just in the second quarter alone, we closed 2 small acquisitions that will be really additive. One of them was called Capstone. It's a middle market advisory company that is a great, terrific complement to our commercial banking middle market focus. The other one is Tirana. It's a business to consumer payment platform, which likewise offers us some terrific capabilities to offer to our clients. And so, the future looks really strong for us. We've just last week announced that we'll be holding an investor day on Thursday, November 10th in New York City. And we're really excited about the opportunity to update the investment community around our long-term strategy and growth plans then.
And finally, Zach, you mentioned 2 record quarters, the diversity of revenue streams across the bank, and your strong credit position given the current market. Do you think Huntington stock is undervalued here?
Well, we did just announce our second quarterly record profit quarter. And during that call, we also increased our guidance for 2022 for revenue and for earnings growth. Our dividend yield is 4.6%. It's the highest in the peer group. And we stand today with very strong levels of capital and credit reserve that allow us to manage through the economic environment we're in. And yet, the banking sector overall is seeing valuations that are lower, just in very similar to the broader market. To give you a sense, our price earnings ratio on street consensus 2023 earnings growth is 9 times. That's more than 20% lower than the 5-year average for Huntington PE ratio. So, we're focused on what we can control, driving our long-term strategy and really executing with discipline. And over time, we believe that the value creation opportunities we can create are very significant and will be reflected in the stock.
All right, Zach, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great to be with you.